Hello, everybody, and welcome to another episode of RMC University. In this particular episode, we're going to be talking about financial statements, reading financials, and make sure you're comfortable with them, because ultimately, understanding financial statements is critical to the success of any association and drives the decisions that are made for a community. So let's talk. The first account you see, this is the balance sheet. The first account you see on the balance sheet is your cash operating account. Your cash operating account reflects money available to the association from homeowner dues payments. All money that the association receives from billing homeowners initially goes into the operating account. And then from the operating account, it's dispersed. It's dispersed to the reserve fund, or it's dispersed to a special assessment account if a special assessment is running. But no matter what the homeowner pays from their dues statement, whether it's dues, special assessment, other charges, fines, anything that the association bills out to the homeowners and is collected initially flows through the cash operating account. And then from there, the funds go where they need to go. One thing to know about the cash operating account is that the cash operating account should have 1 month of dues in it at all times. That is called an operating reserve. And if you're rolling into a new month with at least 1 month of dues in the operating account, you are well protected from unexpected items that will pop up. For example, a sudden increase in utilities that you weren't expecting. You need to have some flexibility, some cushion in that operating account to be able to support the association. The next account on the balance sheet is your cash reserves account. In this particular association, cash reserves are $127,000. Cash reserves are only for reserve items. What are reserve items? Reserve items are what are listed in your reserve study. So those are components of the association that have a useful life of 1 year or more. Ultimately, reserve items are major expenses such as repainting, re-roofing, street work, major irrigation works, major slope work. That kind of stuff would be considered reserve components. And you keep your reserve account and your operating account separate. They should not be commingled. It is a requirement to keep those funds separate. And if you need to borrow money from the reserve account to pay for operating expenses, you need to pay back the reserve account in 12 months. And ultimately, you don't want to be in that situation. You want to be in a situation where your operating account is supporting your recurring monthly expenses. But in the event that you need to borrow, it has to be paid back to the reserve account in 12 months. The next account we see here is the delinquent assessment account. That account, it reflects balances owed to the association as of month end. So in this case, May 31st. So this association is operating very well. There's only $528 owed to the association, but some associations have some significant delinquencies, and we report on that. Now, key thing to note is your cash operating account and your cash reserve account will have bank statements and bank reconciliation reports included. And then your delinquent assessment accounts has a supplemental report that is also details that amount. I like to refer to the balance sheet as an index. An index meaning these numbers, many of these numbers are supported by supplemental schedules within the financial package. The next account we talk about is accounts payable. Accounts payable is expenses that have not yet been paid at month end. So in this particular case, as of April 30th, you'll see $69.55 was outstanding in invoices to be paid, but that was cleared in May because then it came down to zero. But also know this, we operate on an online system called Strongroom. And within Strongroom, you have the ability to view reporting that shows any outstanding invoices at a point in time. Okay, so refer to Strongroom as well for outstanding accounts payable items. The next item that we see here on the balance sheet is prepaid assessments. Prepaid assessments reflect assessments paid in advance by owners. Some owners will pay dues in advance for a year. Some owners will pay them in advance for a quarter, but we track that information, and that's why it's reflected here on the balance sheet as prepaid. Moving on to prior year equity. What is that account? That's an accounting account. That's a closeout account. Every year we have to close out certain accounts, which we will talk about shortly. One of the major closeouts every year is the income statement. The income statement report is a 12-month report, so we have to close out those accounts every year to start for fresh in a new year. That closeout goes to prior equity every year, along with the next account we're going to talk about, which is net reserve activity for the current year. What is that? That's net reserve activity for the current year is inflows to the reserve account and outflows from the reserve account. It is a net account. So your contributions to reserve less your expenses are reflected in that number. We cannot record reserve expenses to the income statement, which is considered an operating statement. Reserve expenses would throw off your budget, right? Because if you had a large expense, let's say you painted or you re-roofed, if you put that into the income statement, that's going to throw off the budget for the year. So where do we record those? We record those here on the balance sheet under net reserve activity for the current year. Moving on, another 1-year account on the balance sheet is reserve interest for the current year. That is, as it says, reserve interest earned on the reserve account for the current year. And then finally, we have net income. And this association is operating at a net income of $26.27 as of May 31st, which is very good, very close to budget, not significantly over budget. So very good. And then we'll move on to the income statement. The income statement is a 12-month report. In this case, this association is a junior, and that's why you're 11 months in as of May 31st. So it reflects your actual and your budget and your variances. It reflects for the current month, and it also reflects for the year to date. So it's important to evaluate how the association is running by expense category each month. We also have on this report your annual budget and your budget remaining by category. Very useful report and very important to review. One thing to know about this report is generally accepted accounting principles state that you record income when it's billed, not necessarily when it's collected. So as you see here, there's a 0 variance. And that's because we operate under generally accepted accounting principles and record income as it's billed. This particular association bills $67.20 a month, and that's why it agrees exactly to budget. So oftentimes you're going to see that number is going to be very close to budget each month. Moving along on this report, we will see an important number, which is your reserve allocation, contribution to reserve. In this particular case, the association is contributing $22.15 every single month to reserve, which is a healthy contribution to reserve. We recommend that every association contribute at least 10% to reserves, and so keep that in mind as a general guide. And then remember, I said on the balance sheet, the net income, which was $26.27. Here's your net income so far for the year, which is reflected on the balance sheet as well. Moving on to the cash flow report. The cash flow report is an operating cash flow report. It's not a reserve cash flow report. It's operating cash flow. So you'll see, and I'll move over to the balance sheet in a second, but just remember these numbers. You'll see your beginning balance here, which is what you started the month of May at. And then you'll also see your ending balance on the balance sheet. And this is a lot, within these numbers is how you got there. So you'll also see in a report to follow your total expenditures for the month. And then we can always detail the homeowner payments as well to the penny in supplemental reports. So that is the cash flow report. But remember, it's an operating report. So when I go to the balance sheet, you see here, there's the 12. Oops, that's not. There's the 12 and there's the 5. Yeah. So that's where you started, that's where you ended, and you move to, again, here we are, the 12 and the 5. Yeah, and then in between is how you got there. Now, how did you get there? One of the items on that report, if you remember, were your disbursements. So this is the next report in your financial package, check disbursements report. Check disbursements report will detail all expenses paid during the course of the month. And there's your 13,000. Your 13,000 is right there as part of your disbursements for the month. Okay, so you're doing well. This particular association is doing really well. And sorry, flipping around there for a second. Next report in the financial package following your check disbursements report is your delinquency report. In this case, this association reports on delinquency and prepaids. Some associations will show a different version of the delinquency report, maybe more detailed because there are more delinquencies and the focus is on those, so you have to see the breakdown of each one. But in this particular case, remember that 528 from the balance sheet? Well, there it is. Again, supplemental. Think of the balance sheet as an index. Most of these items are supported by supporting schedules within the financial package. So you have your 528 and you have your 528 on the report. And then your prepaid number, that's 1758, is also going to be reflected on the balance sheet as 1758. So we detail everything, we track everything, and supplementally support those figures. And then the accounts payable open items, remember, it didn't have any at the end of May. And if you recall on the balance sheet, it was 0 at the end of May. So it's 0 again. So in this case, there it is. There's the 0. But as I said, very important to also refer to Strong Room, which is our accounts payable processing system, and evaluate any invoices that are owed at any point in time. So that's the financial package. Thank you for listening, and I hope you found it useful. We're here to support and answer any questions that you may have at any time. Thanks again.